Markets are on edge. Currencies are snapping key levels like it's nobody's business. Has the dollar lost its grip? I don't think so, not yet. Right now, the yen is fighting for relevance. This week, we could see breakouts across the board. If you're trading Forex right now, you need to know these four major pairs that I'm going to be doing technical analysis on and where they're headed technically. Welcome back, everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in insane markets. If you like what you see, smash the like button, hit subscribe, share my videos far and wide. I want to build a huge trading community. All right, so let's just jump into macro stuff. Right now, we got CPI coming out this week, and it's expected to rise about 2.3% year over year. It's the lowest since February 21, signaling a little bit of deflationary pressures. But the core CPI, excluding food and energy, is forecast to remain at 2.8, still above the Fed's 2% target, but it's stable. So markets are, if you're trading macroly, markets are, cautiously optimistic, pricing in a cooling inflation trend. However, doesn't mean that the Fed is going to cut rates. And I'm going to be showing you an indicator, M2, global liquidity, how I think that's playing in the background. I'm going to be doing a full video on M2 because it used to be traded, just like you traded GDP, gross domestic product. But it's kind of lost favor for the simple reason that the Fed went from money supply to basically, Fed rate targets. And I think the money supply was actually a better way of looking at things. However, I think the Fed is still looking at it, and that's the reason why they've been apprehensive in cutting rates. So anyway, let's get into the technicals now we got rid of the macro. Well, before I do that, let me do what I promised to show you, okay? I got M2 global liquidity right here, okay? Now, as you can see, it's really at all-time highs. And what that actually means is that, there's a lot of money out there. So cutting rates isn't really going to be great for the economy. So the Fed holding steady, I kind of understand Jerome Powell's stance on this. If he would just come out and say, hey, let's look at M2 in the United States, and after COVID, there was a huge injection of money, and we're still working through that money, to lower rates would actually not really help the velocity of money. Okay, so it would really have probably a negative effect. But if you're looking at M2 right now, globally, it's at all-time highs. So what does that mean? So even though the Brits cut rates and, they're looking at the ECB to cut rates, there's a lot of money out there. So if the Fed doesn't cut rates, and now Japan is talking about tightening rates, yet the dollar against the yen has actually been really resilient. So I think that macro traders are smart enough to realize that a potential rate cut in the U.S. is not really coming anytime soon. So therefore, the interest rate differentials would still, basically not really show so much favor towards the yen. So now we took care of that. All right. Dollar yen is continuing to climb. It's got like 147, the figure in sight. Again, the yen weakness persists as the Bank of Japan holds the rates low and slow. They don't really want to shock their economy either. Now, we also have the tariff situation in the background. So really, if I was thinking of Bank of Japan governors and the economic team there are probably saying, hey, you know what? We still want to export, so we need a weaker yen to make sure that we set off this tariff issue that we have. Now, this is all my conjecture, okay? This is what I'm thinking about in the background as I trade this stuff. So technically, let's get into technicals. All right, so we were in a descending wedge on the daily, is also on the 4-hour chart, 1-hour chart, and once we broke up through that descending wedge, we started seeing what is a bull kind of rally upward. All right, so if I just do quick technical analysis on dollar yen, if I'm doing what I consider 3-bar harmony, right, as a easy kind of trend indicator, the market's going to open. We got 1, 2, 3 bars. So the first top that dollar yen's got to close over is 146.19. Now it is Sunday, 10:35 in the morning, 5/11/2025. And the reason I say that is because I'm going to tell you what I did in dollar yen. I went long dollar yen at 145.17. I have a stop at 144.68. That's just my personal trade. I do believe that we're going to get up to 146.93 and potentially even like 147, say 50 this week. That's just my opinion, okay? But I'm telling you exactly what I did. This way, you know, people, if I say it tomorrow, and I'll say it if I'm wrong, I'm going to say I was completely wrong, I got stopped out, but I do have a stop and reversal at 144.60. So if I do get hit, I'm going to actually turn the shit around and like go for like 143.80 again. But as it stands, I'm kind of a dollar yen bull, so I'm believing that we can get up to the 146, 147 the figure, maybe even potentially 147.50. So right now, we have a short-term support on the weekly right at 144.34. So really, my stop should actually, it's just too deep for me. You know, I think that if we break that, say, 144.68 level, we're probably going to test that level. And then I would, if anything, I would go short and I would look to turn or look to square and then see what the market price action is. And if it's going back up again, I would probably potentially buy it again with a stop below this. But it's just too deep right now for where I'm at, you know, for my personal day trading style. So dollar yen, you know, we have the resistance 147. As I said, we got support at 144.34. If we open up pretty strong, we open up above these highs at 146, you know, we can get through 146, say 20. We got a good shot of hitting 147 this week. If we turn down below 144.35, you know, we got a support level at I'm going to go to this close right here, 143.71. That's a very important point. Critically, 142 the figure. If it does break that, then all hell's breaking loose. We're going back down to that 139.94. That's what I got going on in dollar yen. Let's go over to good old sterling dollar, which I think is a complete nothing burger. All right. I think sterling dollar is really bearish. I said this on my day trading, and you got to come over to my day trading, okay? Because I give the points, and I could change my mind at any time, right? I'm a trader, so I mean, I'm not locked into these things, strapped in, you know, with both hands on my teeth, holding on to positions. But right now, cable, it's enjoying a little of a short-term bounce back after the UK-US trade agreement. However, if you really look at the agreement, the UK really got nothing out of it. You know, it was really a complete win by the United States. Basically, what they're doing is they're robbing Peter to pay the United States. So, in other words, what they're saying is we're buying, you know, agricultural goods from XYZ country. We'll stop buying them from them, and we'll give the money to you. We'll buy your stuff. Same thing with aluminum and steel. We'll do the same thing. So, UK really didn't do much for itself aside from, you know, gaining favor with the United States. So we're approaching resistance really close to, on the weekly, I'll go 133.73. This is a short-term point, 133.35. I said that if it got up into this range, you know, I'd be looking to sell it with a stop like up in here. All right, I still have that same plan. However, if I'm wrong, you know, cable could potentially rally really not much higher to maybe 134.50, 134.43. A rejection at this point up here actually signals the attack on the support at 132.53. The main support weekly is right here at 132 the figure. If cable breaks that, it's heading back down to overall like 127. Hasn't done it yet, but it's actually showing weakness to 127. Now, also the Brits have to worry about tariffs too, so they wouldn't really mind a weaker pound, you know. So that's all playing in the background. So let's go over to good old sterling yen. I was kind of wrong about this. I thought that that's not sterling yen, that's sterling dollar. Where's sterling yen? Right here. I thought that really the cable was going to lead by going downward, pushing sterling yen down. Now, let's go over to a daily chart. This way we could stay with the weekly type of analysis. All right. We've had this 190.28 level for a while, and that is like a main support for sterling yen. Now, what could occur this week? What could occur is that dollar yen takes off and sterling dollar stays at like 132.90, 133.50, like that. It doesn't really move. That would generate sterling yen up higher. Okay, so next level of resistance during the week is really at, I'm going to go up to here. Well, I could go shorter term, 194.14. Above that, I'm going to go 195.51. So sterling yen could actually rally, not due to sterling strength, more likely due to dollar strength against the yen. However, if cable starts to dump, 1, 2, 3, if we break this 190, say 30, that's troublesome for sterling yen itself. It could push down to lower levels like right over here, 189. I'll go 189 the figure. If that breaks, then we're looking at the ultimate support point for the whole bloody thing. Let's get rid of that. I got to change my line for the weekly. The whole bloody thing down at 187 the figure, like 186.78. I'm going to get rid of this because if it does do that, it's going to punch, I would think. Anyway, so cables... sterling yen is actually showing, some strength. You could say it's classic risk-on behavior. Support is held at that 190.28, and we're, eyeing the 195.51 as the next level of resistance. So as long as we stay above that 190.30 level, it's still alive. The uptrend is still alive. So you got to watch you got to watch actually dollar yen for this. I focus morely on dollar yen because that's really where the excitement occurs. Let's look over at sterling yen. All right. Ooh, I got a lot of chart stuff over here. All right, let's get rid of this. This cross has been holding up. It has actually been more resilient than sterling yen. So it's the same gig. Yeah, I have a euro dollar video out, for the weekly. You should check that out. I think euro dollar is bearish. However, it may stay in a channel as well and actually create an upward momentum for sterling yen. There's other technical traders that talk about golden crosses and powering through eventually 165 because the golden cross and all this. I don't really use indicators, but I was watching several people talk about it. And I'm like, oh, it's quite interesting. Well, let's see what happens. I'm thinking euro yen potentially upward because dollar yen weakness, not so much of a golden cross. But anyway, we have support right now at 163.19 on the week. If that holds, we can get up through say 163. Actually, I'll go up a little bit higher. Yeah, okay, 164 the figure, 163.80, 164 the figure. This cross currency could jump up to, I'm not going to go as high as 164.60. I'm going to go more like 164.40. That's where I think that we can go. And now if we break that, then of course that's opening up, higher levels at the 165 major turn point handle. So that's what we got going on in the crosses and in dollar yen and sterling dollar. So the bottom line is we're in a decisive week. We got some dollar weakness out there due to if you look at the DAX. But yen is very fragile, and that's really going to be the key for, keeping the bullish pressure up on sterling yen and euro yen. I'm expecting some decent moves this week, so keep your wrist tight and, follow your system. If you got value from the forecast, do me a favor, make sure you drop a comment below. Tell me which pairs you're trading this week. Let's get the discussion going, man. If you're so inclined, go over to Park Avenue Trading, get yourself a free ebook on breakouts, and I'll see you in the daily videos. And remember, always, always enjoy the party, but dance near the door. Cheers.